Welcome to the latest Motley Fool scoreboard. I'm on Intractable, and we've got longtime fools Travis William and Lou Whiteman giving a 1 to 10 rating to a Moneyball wreck. It's L3Harris, ticker symbol LHX. Rate the strength of L3's business first, including factors like industry and competition. 10 is invincible. A 1 is hopeless. Both of you have 8s, Lou.
Yeah, so L3Harris is the nation's newest prime contractor. They were formed in 2019 from a merger of two second-tier companies, Harris Corp and L3 Technologies. Now, historically, these businesses were not prime contractors, but the deal gave them the scale to compete with the titans. And the focus for L3 and Harris has always been on electronics and other high-value parts of the supply chain. More and more, that's where the margin is. Today's L3Harris has exposure to space, to cyber, to land, to air, to sea, and the exposure to huge programs or potential programs like the Golden Dome, which you've heard about a lot. They also just struck a deal with the U.S. government to spin off its missile business. That should free up cash to devote to higher growth areas while also turning a slower growth area into a growth engine sort of funded by the government. I like that. The downside here is, like with all the defense contractors, you only have one primary customer and they have an appetite that is bigger than the budget, so growth is going to be what it is. But this is a well-positioned company for this environment that should be a winner among its peers.
Yeah, I went very high here too with an 8. Leader in the growing area of aerospace, space, and defense. I mean, I think that space part too is just going to continue getting more funding. So yeah, everything is tied to the government, but when you're in the right areas that aren't being cut, that can be a good place to be, and it can be a really sticky place to be if you can get the business right.
For management, a 10 is Warren Buffett, a 1 is Homer Simpson, 7's for both of you, Lou.
Yeah, Chris Kobasa at one point was the next in line to be the CEO of Lockheed Martin, the world's biggest defense contractor. That didn't work out, but the pedigree is there. He knows what he's doing. I really, really respect him at the helm of this ship. Look, one potential downside, though. He loves M&A. He loves portfolio reshaping. L3Harris post-merger arguably needed some portfolio reshaping, so all that activity, I'll give them a pass there. But I suspect he'll keep doing deals, and so that at least brings it down a bit. You know, I'm also not surprised that it was L3Harris under him that came up with this creative government deal. So maybe there's some upside, but I did ding him a little there. Overall, really solid.
Yeah, it's interesting looking at these CEOs. The job is working with the bureaucracy, right? So he's obviously got a ton of experience doing that. I think that's exactly what you want to see from the leader of L3Harris. The Lockheed Martin situation was maybe a little bit of a ding there, but 7's still pretty high for rating management.
Financials, a 10 is a fortress, a 1 is yikes. Travis is at a 6. Lou, you're at a 7.
So they took on a lot of debt as part of that big merger to create a company. They have finally gotten it down to what they consider a manageable level, just as a percentage of EBITDA. But it's still $10 billion in debt and only $1 billion of cash. That doesn't give you a lot of wiggle room, so that does kind of bring down my score. But on the bright side, company generates $2 billion plus in cash annually, has a backlog of $35 billion in future business, and is committed to returning 100% or more of free cash to shareholders in terms of dividends and buybacks. No complaints, but not pristine, so a 7 for me.
Yeah, I actually want a company that's going to be investing in their growth. If there is opportunities to grow the business, I know that this is, you do have one customer, so there's maybe limited opportunities to do that. But that, giving 100% of cash back to shareholders means that you're just basically getting the yield from earnings, which, it doesn't necessarily give so much upside. So I also ding the company pretty heavily for the debt, having $10 billion in debt. And it's a pretty good, I think right now the operating cash flow is about $3 billion over the past 12 months. So I just like to have, especially where we're at with the market, I'm valuing those balance sheets a little bit more, and L3Harris just isn't pristine in that respect. One
note on that, Travis, and you're right, but in this industry, it's kind of weird. The government provides so much of the R&D money that's a nice asterisk on there, but it's a good point. It's a point well taken.
All right, Travis, let's talk valuation. How well will L3Harris' stock do over the next 5 years? How safe is it? 10's a sure thing, 1's the lottery ticket.
Well, look, the stock has popped over the past few months. So that alone makes me be a little bit more cautious. So I went 5 to 10% on the expectations and 7 for a safety score. So that's a little bit of, I'm worried that right now you're buying at least a local top, which could limit the upside for the stock over the next 5 years.
I think that's fair. And I do think it's a market beater, but not a market crusher. I'm at 10 to 15%. I like their exposure to areas that the Pentagon has screamed are priorities. I think they're only beginning to flex their muscle as a real prime contractor instead of a component supplier. So I do see growth from here, but 10 to 15%, not like amazing in the next 5 years. Safety, I'm at an 8 just because the Pentagon needs L3Harris products, period. There could be budget battles. There could be timing and quarterly hiccups, but the odds of L3Harris not fulfilling that massive backlog look very, very low to me.
Yeah, to the safety point, I love when the defense contractors are beaten down. It's a great time to buy because they're going to be needed by the government.
If only we didn't need their products, right?
Right, exactly. Thank you to both Lou and to Travis. They've given L3Harris a solid overall score of 7.1 out of 10, with neither with a top it, but Lou preferring Lockheed Martin if you're specifically a value investor. Look out for a new scoreboard every market day at 7 p.m. Eastern. Next up is Carlisle Companies. Till then, Fool on.
Defense contractors are weird. You just need to... they all have the same customer. They all have the same budget cycles. So they all trade together over time. So the only time to buy any contractor is when there's something, a temporary thing that has kind of caused one to kind of trail the others.